Hello friends, welcome to your favorite channel, PowerBookSummaries. Have you ever wondered how some people consistently make money in the stock market, while most either give up or lose everything? The secret lies in mindset, strategy, and the discipline that separates a champion trader from the crowd. Mark Minervini's book, Trade Like a Stock Market Champion, unlocks this mystery. In this book, he shares a powerful system built from his personal experience. One that can transform an ordinary person into a professional-level trader. Mark Minervini is a self-made trader who, without any formal education or financial background, achieved what many only dream of in the stock market. He earned millions of dollars purely through the right system and strict discipline. He proved that anyone can succeed in trading if they follow the right method. Let's begin with the very first thing every successful trader needs: the right mindset. Trading is a mental game where greed, fear, and the urge to get rich quick are your biggest enemies. Minervini says, if you can't control your emotions, you can never become a champion trader. So the first step is gaining control over yourself. One of the key concepts in the book is the idea of a trading edge, a system that gives you a statistical advantage over time. Minervini explains that your edge comes when your winning trades consistently outperform your losing ones. For example, if out of 10 trades, 6 are profitable and 4 are losses, but the profits are bigger than the losses, that's your edge. Next, Minervini emphasizes that your exit strategy is even more important than your entry. Most people know how to buy stocks, but they don't know when to sell them. A successful trader knows exactly when to exit the market. Now, let's talk about the most important protective tool in trading: the stop-loss. There are no guarantees in the market, which is why a stop-loss is like your safety shield. Minervini says every trade must have a stop-loss. So if the trade goes against you, the losses stay small. Many traders make the mistake of ignoring stop-losses, and small losses pile up into one big disaster. Mark's system is inspired by the slim style, but he's added many advanced elements like volume analysis, price patterns, and relative strength scanning. From identifying entry points to structured trade setups, his method is highly organized. He also keeps detailed records of every trade, thousands of them. This habit helped him track what worked and where he went wrong, which is how he constantly improved. The book also discusses trading cycles. The market doesn't always behave the same. Sometimes it's in a boom, sometimes in a correction, and sometimes just sideways. A champion trader adjusts their approach to match each phase. Minervini even chose to stay completely out of the market at times, simply because his system didn't give a confirmation. Yes, sometimes not trading is the best trade. Let's now talk about position sizing, how much money you invest in a single trade. This element protects your capital and helps it grow. Many traders put too much money in one trade, and if it fails, they lose everything. A professional never does that. He always takes calculated risks. Minervini's specialty lies in maintaining a trading journal. He documents every trade, every strategy, and the outcome. This allows him to improve constantly, and that's the real key to growth. Those who consistently stick to just one or two proven setups are the ones who truly make money in the market. Their focus is razor sharp. They don't chase thousands of strategies. Instead, they master a few deeply. In trading, following rules is everything, whether it's about stop losses, entry points, or position sizing. Those who break these rules end up harming themselves. That's why each rule should be followed with strict discipline. When you're riding a strong trend, it's essential to stay in that trend. Often, the biggest profits come right after most traders get scared and exit. In the market, sometimes a great stock breaks out, but still doesn't move higher. That's where emotionless discipline and a firm stop-loss are vital. Trading doesn't require perfection, but improvement comes through practice, looking at charts every day, understanding patterns, and constantly questioning yourself is the process that makes you a better trader. Those who think that only big capital brings big profits are wrong. If you learn to use small capital wisely, it will eventually grow big. Most people book profits too early out of fear of missing out, but that's a major mistake. When you catch a great trade, hold it until there are clear signs of trend weakness. Minervini says a great trader is one who is ready to accept small losses in pursuit of large gains. A trader who fears loss can never grow big. The greatest power in trading is keeping your losses small. Every stock tells a story. If you observe the chart carefully, you'll start to understand the behavior. Some stocks move fast, some slow. Some have high volume, others low. Each stock has its unique rhythm, and understanding that rhythm is a core skill of trading. Whenever a stock bounces from support with volume, it signals buyer interest. If the price stalls at resistance and volume fades, it signals selling pressure. Real game in trading begins when you consistently make the right decisions without emotions. Every turn in the market has traps. A disciplined trader moves ahead while avoiding those traps. Minervini says he only takes the kind of risk that he can mentally handle. If a trade disturbs his peace of mind, he won't take it, no matter how good it looks. Behind every successful trade lies a strong mindset, confidence in oneself, a solid plan, and rule-following discipline. Overthinkers miss opportunities, while decisive traders lead the way. Maintaining a trading journal is one of the most powerful tools for self-improvement. When you record your entries, exits, reasons, and outcomes, your mistakes and patterns become clear. New traders don't need to test hundreds of setups. They just need to master one strong setup and stick with it. The ones who go deep in learning are the ones who survive the market. Shallow knowledge brings only temporary success. When a stock rises quickly and then consolidates briefly, it's often preparing for another breakout. Recognizing and entering at the right time is a high-level strategy that Minervini emphasizes again and again. Many traders keep staring at the charts until the opportunity slips away. But those who plan ahead and stay alert make timely entries. In trading, preparation is more important than reaction. Markets never offer certainty, only probabilities. If your setup is strong, volume confirms it, and the trend is in your favor. All you need to do is enter according to plan and wait. Every successful trader has a special kind of patience, the kind that can endure losses and wait for the right opportunity. Most people either enter too early or panic exit too soon. Professionals, on the other hand, know exactly when and what to do. Minervini says, when a trade doesn't go according to your plan, the best decision is to exit and look for the next opportunity. Feeling stuck in a trade is a trader's biggest weakness. Trading is not magic, it's a process. It takes time, patience, and most importantly, self-development. Work on yourself daily. Reflect on your decisions weekly. That's the way forward. In the next part, we'll explore how professional traders approach risk management as a system and how small stop losses open the door to large profits. Risk management is the heart of trading because without it, no strategy is complete. New traders often get so obsessed with dreams of profit that they ignore the risk of loss. Professionals do the opposite. They learn to manage loss first. If you only risk a fixed percentage of your capital in each trade, your trading account stays safe over time. For example, if you risk only 1 to 2% per trade, even 10 consecutive losses won't wipe you out. Minervini repeatedly says, first decide how much loss you can tolerate under any condition, and only then take a trade, not the other way around. Placing a stop loss and sticking to it is an act of discipline. Many traders hope that the price will bounce back and remove their stop loss, but that small mistake leads to major losses. Stop loss is not just about limiting losses. It also gives you peace of mind. When you know your worst-case scenario is controlled, you can trade without panic. Every time you trade without a stop loss, you're putting your trading future in danger. The market is always uncertain, So building a wall of protection is essential. Minervini also emphasizes that stop losses should be placed where your trade setup becomes invalid, not just to save money, but for technical reasons. One more important point: never put too much capital into a single stock, no matter how good the setup looks. Every trade is a possibility, not a guarantee. Diversification is key. The most powerful force in trading is compounding. When you consistently grow small profits over time, they turn into significant wealth. But this is only possible if you control your losses and protect your capital. Every successful trader knows that big profits come from riding big trends. That's why it's important to stay in the trade as long as the trend is strong, and exit quickly when it weakens. Many traders enter too early without confirming volume or checking if the breakout is real. Experienced traders wait for confirmation before acting. The true art of trading lies in patience. Those who try to trade all the time often get trapped. But those who wait for the perfect moment succeed in the long run. The market doesn't offer opportunities every day, but when it does, the reward can be massive. Mark says every trader must identify their own fear and greed. Fear keeps you away from profits, and greed pulls you toward losses. Controlling these two emotions is called mental discipline. When you follow your trading rules, even if the trade fails, you're still a successful trader because you trusted your system. And that trust is your real strength. Recognizing a major move in the market is every trader's dream. But it takes more than just reading charts. Just watching the charts isn't enough. You need a special vision, a perspective that goes beyond the surface into the depth. When a stock trades in a long range and then suddenly breaks out with high volume, it's a signal that a big move is coming. But recognizing this requires patience and practice. Mark Minervini says big moves often occur when the average trader gives up and exits while the professionals step in. Thinking differently from the crowd is where real trading edge lies. Another key point: when you catch a big move, don't make the mistake of exiting too soon. Staying in a strong trend and trailing your stop loss is how you extract the full potential of the move. A powerful daily routine is critical for success in trading. That includes checking charts every morning, updating your watch list, studying the market trend, and reviewing your strategy. Opportunities appear in the market daily, but only for those who are prepared. Those who trade without preparation often make costly mistakes. Mark emphasizes that it's important to stay updated daily. The market keeps evolving, and you need to evolve with it. Traders who cling to old methods gradually fall behind. If you want to trade professionally, you must treat it like a business with a system, a logbook, a routine, and most importantly, the right mindset. Every successful trader follows a system that tells them when to enter, how much to risk, where to set the stop loss, and when to book profits, all without emotions. Big moves don't just appear on charts, they're hidden in the language of the market. To understand that language, you need to read volume, movement, breakout patterns, and sentiment together. When a stock rises on strong volume and then moves sideways in a tight range, it's like the stock is resting. Once that rest ends, a powerful new move often begins. The biggest enemy in trading is impatience. Those who try to make quick money by chasing every opportunity often end up with nothing. But those who follow a system and stay patient gradually become strong traders. Mark shares that he spent years working on himself, learning from every bad trade, analyzing every loss, and reflecting on every profit. This process of constant improvement moved him forward. In trading, you must constantly ask yourself, is my strategy right? Am I trading emotionally? Do I understand the risk? Have I defined my stop loss? These questions push you to think like a professional. Every trade is a story, and every story teaches something. If you're willing to learn, the market becomes your greatest teacher. If you treat trading only as a way to make money, your thinking will stay limited. But when you turn it into a lifestyle, your understanding deepens. Mark made trading a part of his daily life, waking up on time, studying charts, reviewing trades, and checking his emotions. Unless you improve yourself daily, you can't survive in the market. This is a game where your biggest competition is yourself. A true trader remains calm in loss, balanced in profit, and disciplined every single day. Mark always saw himself as a student. He says, "The market teaches, but only if you're ready to learn. Every failure is a lesson. Every profit is a responsibility." The most important thing in trading is self-belief. But belief only comes through preparation and practice. You work daily, study every pattern, and feel every movement. You build real confidence. Thousands of people enter the market daily, but only a few survive in the long run. Most are looking for shortcuts. But in trading, there are no shortcuts. You must eliminate the habits that slow your progress, like overtrading, emotional decision-making, or trading without research. A true champion is someone who prepares daily for their goals, learns from mistakes, and refuses to give up. Mark shares that in the early days, he failed many times. But every time, he asked himself, "What can I do better next time?" That question propelled him forward. The more you understand yourself, the more you understand the market, because the market is just a mirror. It shows you your fear, greed, and discipline. If you can change yourself, you can change your trading. And if you change your trading, you can change your life. Building a strong trading mindset takes time. But if you stay patient, you eventually become what you once dreamed of. Mark's mindset has inspired thousands. He has shown that even an ordinary person, taking the right steps every day, can reach extraordinary heights. Understanding the market's movement is an art, but identifying the early signs of that move is a science. Before every big breakout, the market gives hints. Those who understand patterns spot them first. Mark studies classic patterns daily, like volatility compression and flag-based breakouts. These patterns signal big moves. But a pattern alone is not enough. It must be supported by volume. Without volume, the move won't be sustainable. And that's the difference between an average trader and a professional. Mark stresses, you don't just look at charts. You must understand them. Every candle has a story. Who bought? Why? How much? And what happened next? To learn this, you must train your eyes daily. Without daily chart study, your perception won't sharpen. An experienced trader can read them. Market's language without words. The crowd always arrives late. But those who see early gain the most. Mark has always said, the traders who are eager to learn something new every time are the ones who make money over time. Success in trading doesn't come once. It comes from consistently making the right decisions. Markets won't always go in your favor. That's when it's most important to stick to your rules. Mark shares that many times he didn't enter trades, even in his favorite stocks, because the right trigger didn't appear. Trading doesn't mean trading every day. It means trading only when the time is right. Patience is the hallmark of a champion trader. Another recurring theme is risk management. Mark says if you risk a fixed amount on every trade and use logical stop losses, you'll be profitable in the long run. He has leveraged many market cycles in his career, but only because he understood that every cycle comes with a different mindset. For example, in a bull market, the crowd becomes overly excited and buys blindly. In a crash, the same crowd panics and sells. But a champion trader stays balanced in both conditions. Mark says he's seen real opportunities emerge when most people were fearful. The most money is made in times of fear, when everyone is selling and only a few are buying. To identify cycles, pay attention to signs: overall market trend, volume analysis, behavior of leading stocks, and economic news impact. If you understand this combination, you'll be prepared for any market condition. Mark believes every trade should be part of a plan. If you stick to your system, over time, Victory is guaranteed. Your system should define when to enter, when to exit, how much risk to take, and which pattern to trust. Another often overlooked aspect of trading is review. Mark reviews all his trades weekly, where he made mistakes, where he made good decisions, and where he was emotionally weak. This analysis is what makes him better every week. A real champion learns from every loss and takes every profit seriously. He never gets overly excited or disheartened. He knows that to win the long game, balance is key. Trading isn't just a chart game. It's a journey of personal growth. It tests your mindset, your habits, your discipline, and your patience. Mark says the one who conquers the mind conquers the market. To become a professional trader, you must strengthen both your technical and mental sides. Without mental readiness, technical knowledge is incomplete. Mark says the most important thing for him was staying disciplined and emotionally in control. Fear and greed are the biggest enemies in trading. Every time he acted emotionally, he lost money. But when he followed his plan calmly, he profited. That's why he says a trader's biggest weapon is his mindset. For technical preparation, Mark studied indicators and chart patterns every day, like moving averages, volume indicators, and RSI to understand market momentum and direction. He kept updating himself with new strategies because the market is always evolving. Another key teaching: without planning and discipline, success is impossible. Without a clear plan, you'll get lost in the market. Mark says sometimes he was satisfied with small profits to avoid bigger losses. That mindset and patience are what ultimately bring massive success. He advises new traders not to rush or take impulsive trades, but to move forward slowly with patience and discipline. In this process, self-reflection is crucial. Analyze every decision. Know what you did right and where you need improvement. The journey of improvement continues as long as you stay committed to becoming better. Mark says, true success isn't just in profits, it's in mastering yourself. In the next part, we'll learn how true champions face massive challenges and how they bounce back even after big losses. A true champion is not one who never falls, but one who rises again after every fall. When you fully understand yourself, when you possess discipline, patience, and dedication, you start to see every market fluctuation as an opportunity. Trading isn't just about money, it's a journey to conquer yourself. It teaches you how to overcome fear and greed to make the right decisions. Mark's story proves that anyone who puts in consistent effort in the right direction can become a champion in any field. No matter how hard your journey is, if you decide not to quit, success will follow. So remember, the true champion in the market is one who defeats their fears, pursues their dreams, and strives to become better every single day. That champion is already within you. It just needs to be awakened.